Okay, good afternoon. May I welcome everybody. This is actually the very first webinar organized by FEPS, the Foundation for European Progressive Studies. My name is László Ander. I'm the Secretary General of FEPS. I'm going to moderate this discussion, which was actually organized by my colleagues, David Rinaldi, Elean Umez, and Elena Gil. They are not going to be visible in this, in this program. However, I'm grateful to them for preparing this meeting. What is the discussion about? The discussion is about an extraordinary crisis and its consequences. In this period, thousands are losing their lives in Europe and millions are losing their jobs. The health emergency which we're in may have been unexpected, but the question is whether it is inevitable that it turns into an economic crisis and also a social crisis. The nature and the scale of this crisis is calling for new instruments to fight it, including at the level of the European Union. And perhaps the first instrument that has been invented in recent weeks is an instrument which we call the SURE, S-U-R-E. This is about helping the European Union member states to save jobs and also the incomes of the workers whose jobs can be saved. What this new instrument can deliver and what it cannot is the critical question today. The starting point for the discussion today is an article which was published last week on the voxeu.org website. This website belongs to the Center for Economic Policy Research. The article about SURE had 8 authors altogether, and today we have 4 out of the 8 authors participating in the webinar. Let me introduce now the panelists, and I would like to start not in the order of the interventions, but I start with Frank van den Broeke, who is a university professor at the University of Amsterdam, but also a former minister from Belgium. And I started with him because he was actually the main initiator, the spiritus rector of this article that was published last week as a joint publication. One of the authors is Professor Roel Betsma, also from the University of Amsterdam and a vice dean of the Faculty of Economics and Business, and also a member of the European Fiscal Board. We also have with us Teresa Kuhn, who is Associate Professor of Political Science, also from the University of Amsterdam. And we also have John Burton, who is a former Minister for Social Affairs from Ireland. And she was actually chairing the EBSCO Council at a very difficult time, at the time of the Irish presidency in 2013, when very innovative initiatives were promoted, like the Youth Guarantee or the Social Investment Package. Now, the first speaker will start soon, but let me now also announce that after all 4 panelists spoke, there will be a Q&A sessions, but the questions can only be sent in writing. You can send your questions while the panelists speak, either via the Q&A box in Zoom or by commenting the Facebook live video. And please indicate, if you send a question, to which speaker you are addressing your question. And now I would like to ask the first speaker, Professor Betsma, to present his views about the SURE instrument, accompanied by a little PowerPoint presentation, if I'm not mistaken.
Okay, thank you very much, László. Thank you for having me. Let me just call my slides on the board, let me just see. Share screen, okay. Let me just try again. Share, okay, here they are. Mm-hmm. So thank you again for having me. So let me say a few words on, first of all, on the financial side of the SURE. which is part of a larger package of 540 billion. And there is also money from the ESM, which is earmarked support, specifically for health-related expenditures. And there is also support from the European Investment Bank, 25 billion, and that should support 200 billion of investment in total. And then there is, of course, the shore, which is 100 billion. Now, in total, this will probably not be enough to successfully combat the crisis. So specifically on the shore is based on collectively borrowed funds with a collective guaranteed repayment, and then countries can receive support in the form of a loan. Participating countries are only liable for up to their own maximum. So in the case of the Netherlands, for the first 2.5 years, it's something like 1.4 billion. But it's not the case that a country is liable potentially for the entire amount, only for its own share. The scheme has a long repayment schedule, so there's a repayment of the loans of maximum of 10 billion a year. So it's a kind of stretched out, and that is, of course, in order to avoid that you could get into kind of rollover risks with the debt. And so for the first 2.5 years, there is, right now, the current guarantees are 25 billion. Now, the question is, what is the financial benefit of the shore? And I think, if I understand correctly, the net financial benefit is that countries will have, or some countries will have, lower debt interest payments, because the shore it's a borrowing mechanism. So if a country uses it, its public debt will increase, but potentially it has to pay a lower interest than when it would borrow on the market. And so potentially you have the benefit of lower interest payment, and it may actually, in the current circumstances, some countries may actually kind of, benefit from an alleviation of the borrowing constraints that they may encounter at the current moment. Now, the way I see it is that, generally speaking, the net financial benefit for individual countries is quite limited. But the benefit of the system is that it should increase the incentive of countries to financially support reduced working hours for employees and also self-employed. So the benefit is that it helps to avoid layoffs. And that, of course, has the benefit that, at the individual level, that people, avoid being unemployed, which, of course, is just, at the individual level, it's a great benefit. But it's also, when we talk about this in economic terms, what you have is a reduction in the firing and hiring costs. And so when an economy starts growing again, you don't have to search for the workers, because if you retain them, then of course you save this cost. And this is of course very difficult to quantify, but it's probably quite important, is that by not firing people, you also reduce the loss in human capital. And so you reduce potential hysteresis effects that I think we also saw from the previous crisis. Now, just to continue on what are the potential benefits, I think if we compare Europe with the US has followed the route of increasing benefit levels, and that of course helps to keep up demand. I think the sure, or at least what it makes possible in terms of reduced working time has not only has the benefit of keeping up demand, but it also has the benefits that I mentioned before. So it has, in a way, additional benefits. But to be clear, I think it's only and this is also, I think, how the Commission calls it. It's a second line of defense. It's primarily a financing vehicle, because in the end, the effectiveness of the arrangements for shorter working time, that of course depends on how things are arranged at a national level. And here, I mean, so when talking about the effectiveness, you have to look at the national level, and you have to look at questions such as maybe, you know, workers could also use their idle time for schooling, online schooling, keeping up their human capital, and these things need to be arranged, of course, at the national level. Now, I'm sure that people will start investigating the effectiveness of sure. But I think we could probably learn from existing empirical work that has been done with regard to the previous crisis. So there is work by Balair and other people from Germany who looked at, you know, what have been the effects of you know, working time reductions for Germany, and they come to actually quite substantial numbers for Germany in the previous crisis. What they don't look at, and what is very difficult to investigate, but quite important, is actually, you know, what is the effect in terms of, you know, saving the loss in potential output, because there are fewer hysteresis effects. So I think here there is an important area for further research. So let me stop here and give the floor to the next speaker. Thank you.
Highlighted some of the key economic and financial aspects of this instrument. And now we look at the political side with Teresa Kuhn. Teresa, the floor is yours.
Thank you very much. Let me just also share my screen. Okay, well, thank you very much for, yeah, here we are. Thank you very much for giving me the opportunity to present some research here, some findings on public support for European unemployment risk sharing. Because of course, in this current question, a really relevant question is to what extent voters actually support such joint measures. And here we, together with Frank van den Broeke, Brian Bogoon, and Francesco Nicoli, we actually conducted a large survey in 2018 in 13 member states, where we analyzed citizen preferences on policy proposals for EU unemployment risk sharing that varied on 6 dimensions. So first of all, how generous such a scheme should be. So with other words, the replacement rate. Second, whether this scheme should be governed at the national or at the European level, whether it should involve cross-country redistribution, whether it should increase or will lead to increasing taxes, and whether individuals and countries actually have to fulfill certain conditions to be benefiting from it. And this conjoined experiment is actually not about SURE, but about European unemployment risk sharing. So in a way, a policy that has a different target group. Nonetheless, I think it's highly relevant for the current question because it taps on citizens' preferences for risk sharing in employment policies in general. Here I give you some results across countries. We see that there's actually quite high support for packages across countries, but we do see that the Northern European countries are more reluctant or more hesitant about it than countries such as, for example, Ireland or Spain that had been struck by a previous crisis. When we really look at the different dimensions, and there we see that people are highly sensitive to how such a policy is actually designed. And the first thing that really matters to people is how generous such a policy actually is. Here we see that, so values here more on the right show increased support, and values more to the left show decreased support. And here we see that a more generous scheme with 60 or 70% replacement rate significantly increases support for such a policy. We also see that what matters to people is whether such a scheme actually involves conditions. So whether unemployed people have to do something in order to benefit from it, and whether countries have to do something. And also here we see that such conditions actually significantly increase the support. It's important to say that the most preferred option that people would like to have is a combination that we would call the free lunch version, because it includes a very generous scheme, but not any higher taxes. And this is maybe less realistic. However, when we focus on only the viable options, so options that make sense really from a policy perspective, we also see that here there are various packages that receive really high support. So here the highest one has almost 80% of support rates. It's a very generous scheme with conditions, and it even includes cross-country redistribution and higher taxes. Finally, to come back to the conditionality question, because this is of course something that has been a big issue also with, for example, the Eurobonds and the discussion between the Netherlands and Italy. Here we see that also among public opinion, conditionalities really matter, and they can in a way make or break a deal. So if you just change basically whether such a scheme has no conditions or in fact does include conditions, then you see that support really goes above 50%, and otherwise it does not. Let me just summarize very quickly the main findings so far. We do find that there's high support for European unemployment risk sharing, actually surprisingly high support. It's interesting to note that across countries, we see that people really prefer more or less the same packages. There are only very small differences across countries, so there seems to be a high level of agreement on preferences. And in general, people prefer the full Monty, generous packages with high conditionality. And this, lets us conclude that policymakers at the EU level, they actually have a mandate to implement EURS schemes that are both bold and also very generous. Thank you very much for your attention.
Much for this analysis and this very important message that there is strong public support in Europe for risk-sharing instruments, and it's especially good to hear from Amsterdam, from an Austrian professor. The next speaker is Frank van den Broeke. Welcome, Frank.
Thank you, Laszlo. I'll start sharing my slides. Okay, thank you so much. So I will build on the previous two speakers. We were together with Laszlo in publishing a short paper on the SURE initiative. And in order to avoid any misunderstanding about the message in that paper and the message today, the argument is not that SURE can be the main component, let alone can be the only component of a European response to the corona crisis. You need a much broader and a more massive intervention. However, risk sharing in the specific domain of employment, unemployment must be part and parcel of a more encompassing European initiative. That is at least what we think. And hence the question is, to what extent SURE fits that bill? Is it adequate as an ingredient of a more massive program? And also, how does it relate to further work on the idea of a European unemployment reinsurance scheme, an idea that's been discussed for quite a number of years, and that is also in the current Commission's agenda. So let me first return, and this is my first slide, let me first return to the debate on unemployment reinsurance at the European level and position SURE in that debate. I'm happy to do that here, being hosted by FEPS and Laszlo Ander, because as a matter of fact, Laszlo was, I think, the first political actor who drew attention to this idea, who stimulated research on it, first of all, at the level of the European Commission, a number of years ago already. And I think these initiatives by Laszlo have been pretty important to get momentum in the debate. Meanwhile, many experts have intervened in this debate. And summarizing, I would say there's basically two arguments as to why such a reinsurance risk-sharing device would be highly useful for the European Union. The first argument is specifically on the monetary union. The second argument is larger. It basically applies to the whole single market. Very briefly, first argument, a monetary union without automatic fiscal stabilizers is inevitably a fragile monetary union. And I will not rehearse the argument. The argument here is very much linked with the argument about how financial markets works. It's about avoiding sudden stops in credit flows, etc. I will not rehearse it, but let me simply underscore two aspects of the kind of scheme you need if you buy in that argument. First of all, you need a scheme that allows what we call in our jargon intertemporal smoothing. This means, in less jargon, this means that you need a scheme that allows to stabilize the economies over a number of years. And for that to be possible, such a scheme must have the capacity to issue debt. First element. Secondly, it's crucial that such a reinsurance device for the monetary union is set up ex ante. I mean that you establish the scheme, you define the rules of the game, you don't negotiate it after the crisis has hit. It should be there, it should be ready. Its mere existence should change the expectations of the economic agents with regard to the fallout of an economic shock when that occurs. And so this idea of ex-ante automaticity is pretty important in the whole debate. And in a nutshell, and leaving aside all kinds of technicalities, basically it means that there's an ex-ante commitment of assuring the member states that they will receive budgetary support from a kind of European fund when they are confronted with a sudden and a severe increase in unemployment. That is the monetary union debate. But there's a second argument, which in a sense is a more general argument because it applies to any set of countries that are economically very highly integrated, countries that have very significant trade links among them. And this argument is basically that, well, good stabilization capacity, good stabilizers, adequate stabilizers, this is something that helps everybody. It's in the common interest that all the countries that are highly integrated with each other do have this. Again, using an economic jargon, there's a positive externality here. And here I would like to underscore what the rule said in the beginning. Maybe for an economist, the main argument maybe is here. It's an incentive for the member states to use such schemes of short-time working in this case, to launch them quickly and to use them well, because it's in the common interest to do that, notably in the context of a severe contraction and disruption of both demand and supply chain. So that is the general argument. Now the question is how to assess SURE in that perspective. I'll do this very quickly because time is running. I have 7 points. First, SURE is not unemployment insurance. It is primarily employment insurance. It should stabilize existing employment relationships. It's a very good priority. There are very good reasons for that. Secondly, if you want stabilization, the volume of your effort is key. I think this 100 billion is indeed okay qua volume. You can compare it to what we spend on unemployment. If you take the worst year over the last 10 years, spending on unemployment benefits over a whole year for the EU 27 was 193 billion. So 193 for a whole year spending on unemployment benefits, 100 billion supported by the EU today. That's quite a lot of money. However, if, say, the crisis would last with these confinement measures for, say, longer than 3, 4, 5 months, and if many countries would apply, then 100 billion is not enough. Three, there is an important positive story here in that the Commission proposed a true European instrument. It's a true European instrument. It's not an intergovernmental agreement. The funding is also a true European funding, and this also means that it can be decided with qualified majority. However, here's an important risk. To really implement it, all the members of the EU must sign up to guaranteeing it, to contributing to the guarantee. So there is a minor risk of veto players in how it is proposed to work out in the launching of the scheme, because you need all the members of the EU to contribute to the guarantee. There is kind of a minor veto risk there. Four, repeating a little bit what Roel said, this is about soft loans. I would say that's okay. I mean, probably it's impossible to invent something more complicated now. It's about soft loans, but obviously that means that the whole risk of debt unsustainability for some countries is relatively unaffected. Stays there as a big issue to be dealt with other schemes and other types of solidarity. 5, on the conditionality. That's indeed an important issue, and here I'm a bit in two minds. I'm a bit in two minds for the following reason. Obviously, you cannot today try to impose very detailed conditions on how member states should organize the schemes for which they ask for support. There is no time, there is urgency. And the Commission therefore proposed something extremely broad, hardly any conditions. And that's understandable. However, in the somewhat longer term, that's also a bit problematic. In a somewhat longer term perspective, you would need to delineate what this is about. You would need to think about what are the kind of best practices you want to support. And so you would need to think in terms of some conditionality. Both for the reasons that Teresa explained, I think, very well. There is a matter of public support and trust that is here, but also for just reasons of good policy. And so I hope that this will be a learning experience, also in terms of best practice, and that when such a scheme becomes kind of consolidated, that there will be more of delineation, more of, let's say, steering towards good practice and delineation that makes it also politically sustainable and economically efficient. 6, and importantly, it's an employment insurance, but I think everybody will agree that whilst that is a priority today, it will not prevent unemployment from increasing for many reasons. And so you need adequate unemployment benefits for people who will be in unemployment. And you need the full implementation of this very nice idea that is in the European Pillar of Social Rights, that all workers should have access to social insurance and to decent unemployment insurance. And that brings me back to the starting point. basically, one day we need a true European level reinsurance and quality assurance of national unemployment benefit systems, certainly so for the Eurozone. And as I said, this is something that needs ex-ante work. We should not wait for the next crisis. So we need a real insurance device based on ex-ante rules, based on automaticity. Wrapping up, this is a good initiative. We should applaud it. It's been put forward in a very clever way by the Commission, I think. It can be a useful kind of plug-in, I would say, if one day we have an encompassing euro area unemployment reinsurance. This could be kind of a plug-in that could be launched in cases of very severe disruption. And then I think it applies, and it should apply to the whole single market. So yes, it's a good initiative. There are some question marks. It certainly cannot be the whole story, absolutely not. And we should try to see it as a kind of a precursor of a fully fledged reinsurance device. Thank you for listening.
Mm-hmm. Thank you very much, Frank. I think you convinced us that this is a significant step, but much also depends on how the crisis develops. Yeah. And I think it was also a very important point that, if possible, safety nets have to be created before a crisis comes. But as compared to the speed of this initiative, of course, we have to appreciate it. But what does it mean with the eyes of a policymaker? John Burton from Dublin. Would you like to join the conversation? What do you think about this policy initiative? How much will it help, for example, for your country, Ireland?
Well, good morning, everybody, or good afternoon. And first of all, I think the initiative is very welcome. I think, to be realistic, it's limited. And as has been said, this is a short-term working payment to keep people in employment, which Germany in particular did very successfully at the time of the last crisis. But as a minister who served during the time when you were Commissioner, Laszlo, I think the strongest factor which really was disturbing in European societies, and particularly in countries like Ireland, was the mass unemployment that occurred among young people. This included young people like graduates, trained apprentices, and so on, being let go in various jobs, particularly people like engineers and other technical qualifications. And basically, although they had done everything right, gone to college, got their degrees, postgrads, etc., they still lost their jobs. Many of them had family obligations, and that was indeed a crisis, not just for them, but for particularly for the people in their late 20s and 30s, losing their job when they had things like loan commitments on houses was really dreadful. It was even worse for people coming immediately out of both the school and the college system. They had no jobs to go to. So for instance, in Ireland, youth unemployment, which is generally around twice adult unemployment, was around 32%. So for people under 24, that was the rate of unemployment. But in other countries, particularly those where the Troika had come in, like Greece and Portugal, and indeed Spain, Italy, and parts of France, it was even higher, hitting 40, 50, and in some cases over 60%. So what young people did all over Europe, and particularly in Ireland, was where they could, they emigrated and tried to get work anywhere they could. So I think what is absolutely essential is that although the SURE initiative is welcome, you have to bear in mind that if this recession as forecast happens to any degree, there will be an awful lot of people losing jobs who never expected to lose jobs. And the social security system will have to be able to give them an opportunity, the education system, the training system, to do what is necessary to get back into employment or indeed into self-employment. One thing that makes me apprehensive about SURE is the linkage to loans, because I think we should just remind ourselves that the real cause of the recession following the collapse of the banks in countries like Ireland, but also the events internationally, was that countries like Ireland and indeed Portugal and Greece couldn't borrow. So once they lost the power to borrow at reasonable rates, in came the Troika, the IMF, the Commission and the European Central Bank. And the conditionality was really very, very tight. The IMF subsequently reviewed its position. And in fact, Mario Draghi's arrival in the European Central Bank, where he determined to do everything that was possible, was really a game changer. So I think the mood now in terms of the positive action in SURE is an awful lot better. But I think we need to be apprehensive about the impact of very high debt levels on certain countries who may be very hard hit by the crisis. I would say as well, we shouldn't waste the crisis. We should see it as an opportunity to change things for the better in terms of some of the initiatives that have been mentioned but have never really happened. We need to look after, as I would say, from a policy point of view, younger people, but we also need to look after the people who are on the bottom tier, the cleaners, the restaurant workers. So the reconfiguring of the European social contract to promote minimum wage, minimum income, a basic income, I think we should be looking at that. And we also, in most big cities, need to include nowadays housing costs, because in a lot of cases, low paid salaries are not enough to cover either individual or family housing costs. And we need to be alert to that. So I would say the European Union in many ways needs to maybe go back to the ideas as well of somebody like Jacques Delors to have a really strong both equality program and an anti-poverty action program that would allow us to address inequality. I have to say, in recent weeks, and speaking as somebody on the political side, the thing that happened as the outcome of the last recession was an enormous rise in inequality. And I don't know if people have been following the American stock market, but at the moment, somebody like Jeff Bezos, the owner of Amazon, his wealth has gone up by 24 billion as people rush to shop online. So as in all crises and wars, he's one of the beneficiaries. But I think for a lot of people who are inclined to think or vote in terms of socialists and social democrats, that level of inequality and somebody gaining such extraordinary riches is always like a pebble in the shoe. It's wrong in a situation where then you're seeing people sleeping in doorways without proper housing. So I do think we need to look back to a lot of the fundamentals of the PES and the socialist parties to look at what we can do, and really to look at new initiatives that open up opportunities to the people who don't have those opportunities at the moment. I think we need to protect the social security systems to ensure that the social security systems are adequate. I would imagine in terms of the recovery, we're looking at a period of maybe a year, 2 years. And remember now, we look back at the recession of the 2008, 2010, 12 period, and it seems like it was very fast. But I'm sure Laszlo would agree, for the people who endured it and the people who lost their jobs at the time, particularly the younger people. If you were 20 when you came out of college, or 21, you could have been 26 or 7 before you got a job. So I think, again, we need to think in concrete terms about employment. I would say the youth initiative, which myself and Laszlo worked on, one problem that bedeviled it, as with a lot of European schemes, and SURE is a bit different here, and I welcome that, is that a lot of it was a pilot program. And with the pilot program, as people who've been involved in programs will know, you get something started relatively quickly, but it's also can be quite optional as to how long it continues or how well it's funded. And I think that's a critical issue in terms of initiatives to help people affected by this crisis. Thank you.
For comparing the two crises, and I think we will come back to many points which you highlighted, but I'm afraid quite soon Professor Betsma will have to leave us, and I want to ask him first to respond to two questions. One of these questions is quoting the former Vice President of the European Central Bank, Vittor Constantio, who was advising recently Italy against using the ESM. And the other question was asking him about the connection with initiatives like SURE and the free market and neoliberal ideologies. Professor Betsma, would you like to respond to these two questions?
Oh, thank you, Mr. Andor. Yes, of course. I have a little bit of a different view from what the former Vice President of the ECB says, because I think we can look also at what's, at what happened in the past. So, for example, Spain, I think there was, resources reserved, and we also seen other countries that have made use of ESM, and I think they have benefited from that. And you see, I think it all comes, so, I mean, I think investors know what is the situation of Italy. And so I'm not sure that going to the ESM puts a lot of additional stigma on Italy. I think it is quite important to recognize that Italy has some structural problems. And so it depends very much on what kind of package would be composed. In case Italy goes to the ESM. I think it is important to have, not to talk about austerity now, but to talk about, the types of structural reforms that Italy needs. And then later, of course, we need to see how one can solve the budgetary issues. So I disagree, I think, on this point. Then on the issue of competition, I think that one of the advantages of having a program like SURE is that, and I think we also saw that in the previous crisis, you keep people employed at firms, and as soon as the economy starts growing again, and as soon as we are kind of leaving the immediate crisis, then of course there are also people who can can produce things and can there is a possibility to respond to demand that is picking up. So I think this is also an important advantage of the scheme. I want to say one word about what John Burton was saying, because I think the group that is hit hardest are the people, the young people, indeed, who are coming to the labor market or are at the end of their university and are not able to go to the labor market now. And they lose skills, and this will just, this will have very long-term effects. And I think this will be a very major cost of this crisis that is maybe not fully recognized. Thank you.
Thank you very much, Professor Betsma, for joining us and answering these two questions. I know you have another program and you will leave us shortly. The next question should go to Teresa Kuhn. This is more of a political nature and asking about the impact of the COVID crisis, because the survey which you quoted was conducted before this crisis and already found significant public support for risk sharing. What do you assume about the impact of the current crisis on the popularity of such schemes?
Yes, as you rightly point out, the survey we conducted was done in 2018. So in a very, time of high economic prosperity and actually low unemployment. So our expectation would be actually that support is currently higher for two reasons. First of all, in times of such severe crises, there is usually a surge of solidarity and of also support for any kind of policy that comes from a government. This is also, some kind of honeymoon phase, it's often called. And the other point is that here we're faced with a symmetric crisis. The sovereign debt crisis before had much more of an asymmetric perspective, and there, there was much higher inequality between countries, how much they were actually confronted with unemployment. And in this case, I think we will see high levels of unemployment across Europe. So also for at least in the medium time, I think also for the frugal four and other Nordic countries, it will be more obvious that they can also benefit from European unemployment risk sharing. This being said, we know from other similar crises that the psychology usually works that people are first very supportive, but then there's a moment of disillusionment where people become more critical. We've seen that, for example, when you think that was not a crisis, but a huge change, the German reunification, where German citizens from the West were really welcoming Eastern Germans on the border and were very enthusiastic. And later on, this enthusiasm has actually faded away, and there have been, much apprehension about actually paying more for these Eastern Germans. We've also seen something similar with terms of the migration crisis, where, for example, in Germany and in Austria, citizens were welcoming refugees on the train stations, cheering for them and saying, welcome in Germany, welcome in Austria. And only months later, this enthusiasm and solidarity had actually faded away, and people were much more critical about helping refugees. And this was, of course, taken advantage of by extreme right parties. And I think here, I agree with Frank that conditionalities should not be a question of the immediate solution, but in the medium term, I think it would be good to implement some conditions in order to appease people who are more critical and to give everyone the idea that this is not some kind of solidarity that is actually being taken advantage of by other people. But I think in general, we can assume that there will be more support, at least now, than what we actually found in the study.
If I need to phrase it differently, I would say that the conditionality is more relevant for structural interventions rather than cyclical ones. Because if you are in the emergency, it causes a lot of delay if you really want to work on the basis of new conditionalities. Thank you very much for the reply. I would like to send the next question to Frank van den Broeke from Andrew Watt from the IMK, the Macroeconomic Institute of the Hans Böckler Stiftung. In fact, it's two questions. One of them is, do we have a concrete idea about how widespread the use of the short-time work arrangement schemes in Europe, and whether you think or whether you fear that if SURE is launched, it would be actually an argument against an unemployment reinsurance, saying that it is redundant, it's not necessary anymore. What do you think, Frank?
Thank you. I will again show something, just maybe to make some publicity for yet another piece of work. Do you see it?
Not yet.
I share it. Yeah, here it is. You can't read it, but I published a paper in French with Sofia Fernandez last week at the Jacques Delors Institute in Paris, and it basically builds on the paper that we are discussing, but it has in the appendix a survey of short-time working schemes, both for employed workers and independent workers, self-employed. You can't read this, but Andrew, if you will look at it, and other people who simply look at the table, you can see that by today, most of the member states do have a kind of partial unemployment benefit scheme or short-time working scheme for salaried workers. And there's quite a bunch of member states that do have something for the independent. Although I think there still is a huge challenge out there for the independent workers, and we can discuss that. But so first, there is a lot of material, and you can consult that paper and look at the resources we've been using. And indeed, many countries do have something. Then the question is, how will this play out politically in the debate we need on unemployment reinsurance? And there, if I understand it well, Andrew Watt says, well, there might be different impacts. On the one hand, you can say this is kind of an experiment that might, if it works well, might convince people that we should also have a kind of European support for unemployment benefits. On the other hand, it might be kind of a rival, it might be a competitor. I think it's the first hypothesis that should inspire us. Why is that so? First, it's clear, and Joan mentioned this and explained it very well, I think. You will see unemployment increasing. Why? Because many people are not in employment. They leave schools, they leave high schools, they leave universities, or they leave a situation of unemployment. Andrew, there is a very interesting paper on Germany published a number of years ago, showing that the turnover from unemployment into employment normally is pretty massive. And so if that stops in this kind of crisis, so if people are unable to leave unemployment and transit into employment, your unemployment numbers increase rapidly, even if you do short-time working. So even if you have short-time working, you'll see massive increase in unemployment for that reason, because the turnover from unemployment into employment stops, and because people leaving universities and schools don't find jobs, and because people on temporary jobs that end simply end. So I think the facts will show that you need also to tackle unemployment. So the facts will help here. Secondly, I think that in many of the member states, these kind of short-time working schemes are closely linked to unemployment benefits. They are not the same, but they're closely linked. And if I take Belgium, it's in terms of policy making and architecture, it's very closely linked to unemployment. And so I think it's not going to be seen as a competitor. It might be seen as an experiment rather. But here I would like to come back to what Teresa said. In order for it to be a good experiment in the way towards a true unemployment benefit reinsurance, it needs some kind of more robust policy architecture. But this, I understand, cannot be done in an emergency. But it needs a bit of a more robust architecture. And we might have a long discussion. Laszlo said, yeah, but that's difficult. But I'm not thinking about very complicated conditionalities, but simply kind of a delineation of what you can do and what you cannot do. To avoid very obvious cases of moral hazard by private companies who might misuse this, such things. So yeah, my answer is, I'll stop here. My answer is, I think it's not so much a competitor, I think the facts will show that we need it. And if sure can develop into a positive experiment, it might help us, I would say. People like me who think we need unemployment reinsurance.
Much, Frank, also for quoting the study from the Jacques Delors Institute and Sofia Fernandez. There's a question from Dasha Silovic, who is the chair of the International Board of Central European Network on Gender Issues. I think this question should go to John Burton, because Dasha is asking whether this crisis response should lead us to addressing more systemic issues which the pandemic has unearthed. And for example, also going for a new MFF proposal, a multi-annual financial framework, which would be different than what was originally submitted. For example, also to tackle the European Green Deal and its financing needs. So is this not an opportunity to redefine, for example, what cohesion means in the European Union? John Burton, what do you think?
I do think it's an opportunity, and I think the opportunity should be seized to see what is it that we can do and do much better. We have a particular model in most European countries of a social insurance system and a social security system based on contributions that somebody in employment makes, and then they qualify. Now, the short-term working has the advantage that there are really no conditions in terms of qualifications, as I understand it. It's up to the country and the firm and the business to hold on to the workers in short-term unemployment, in a short-term unemployment. I do think that, for instance, one thing we should look at again in a European context and maybe think about this, and this would be in line with some of the thinking in France over a long period of time, which is the length of the working week, particularly for parents of younger children. I mean, we could think in terms of, for instance, a 4-day week. We could also look at older workers who are coming towards the end of their working life and getting closer to retirement. It may be possible, again, to give them more choice in terms of hours, while maintaining them in employment, but again, perhaps going down to a 3 or 4 day week. I think there's a lot of innovations like that where firms could be encouraged, as with the individuals, to see if this particularly helps their family circumstances. In relation to the Green Deal, I mean, I think an issue there is how do you pay for the Green Deal? And I think in terms of the surveys that we were talking about earlier, it seemed that people got less generous when it came to potential tax increases for something like a Green Deal. And I have a feeling, given that the rapidity which this crisis has struck, that people will be quite wary of potential new taxes. I don't think that's out of lack of generosity. I think it's out of a wariness of what's going to happen to this money. So I do think in the Green Deal, one of the things that needs to be looked at is the notion of the just transition for those workers who may end up losing employment opportunities, whether, you know, that's, you know, people in different kinds of industries, which will begin to be phased out. So yes, I do think now is the time to look at that. But I would be quite, I think we also need a discussion of how we could get public support in terms of financing what's necessary. Perhaps I'm in a way bruised by the Irish experience, because if it's based on debt, which is not collateralized in terms of Europe, it means that in particular smaller countries could end up in very debt-laden positions. Bigger countries like Italy and Spain might have the political power to stay out of any programs like the last time, but a lot of smaller countries wouldn't have, because essentially they would find it difficult to borrow at reasonable rates from lenders, even though unlike then we're now in a much lower interest rate period. But I do think now is the time to look at the alternatives and see what we can do. And also going back to the young people who are, say, in college at the moment and going into college this year and next year during this period of the crisis, to ensure that we are actually building up the technical skills in terms of the new technologies. I think that's an opportunity as well.
I think now we have an opportunity to actually allow one live intervention from the audience. And this is going to be Francesco Corti. And the reason is that FEPS today published a paper in a new series, which we just joined in the COVID crisis. It's called the COVID Response Papers. This is the second paper in this series. There are two authors, Francesco Corti and Amandine Crespi. And Francesco is with us now, and he would like to ask a question from John Burton. Francesco, are you there?
Yeah, can you hear me?
Perfectly.
Yeah, so thanks a lot, Laszlo, for the opportunity. And I won't add a lot in terms of consensus and assessment of SURE, because I think a lot of point has already been raised by the other panelists. Let me just stress an aspect that Amandine and I point out in the paper. It is much more in the long-term perspective, because I think there will be a huge problem. As it has already been said, it's a loss-based vehicle, the one that we have now. So we will have a burden in terms of to the member states' budget. So the first question in the long term, now the EU has decided, for instance, to suspend the Stability and Growth Pact. We will have to reason in the long term whether the expenditure, for instance, is an issue that we raise that has been done by member states to tackle the crisis and the corona crisis will be exempt in the long term from the Stability and Growth Pact. Then we have an issue, and I wanted also to raise this point to John Burton in terms of how to finance the instrument, because now we have guarantee, collateral guarantee from member states, but actually a lot of proposal has already been advanced in terms of alternative way to finance this instrument. For instance, I wanted to ask what she thinks about the proposal advanced by Zuckman and others on a temporary European wealth tax at 1%. To the first percent richest. That could be a way, to find resources at the European level to fund this. And the third point I wanted to raise is in terms of unemployment. I fully agree with the Frank point. We have an issue of unemployment. I think it goes far beyond the people that will lose their job during the crisis, but it will deal also with the people that who are already unemployed and will have to leave. We won't be able in the short period to find a new job. So they will have to rely again on unemployment benefit scheme, and this will become another burden. So I fully agree that we will have to accompany to the SURE a long-term instrument, permanent instrument, which is the European Unemployment Reinsurance Scheme. So these are three additional points. And the last one maybe is the role of the European Parliament we raised as well, because obviously Article 122 is the best instrument to have a quick answer now. But de facto, the European Parliament is excluded from the process, and creates an issue. And if if we take into consideration the results that has been shown by Teresa Kuhn, the legitimacy that that the European Parliament is the house of the European citizens, but actually do not have a say in the way to design the next instrument. And this is a little bit of a tricky point in terms of democratic legitimacy. Thank you.
Thank you very much, Francesco. John, would you like to respond? We cannot hear you.
From Francesco and Amandine. There are a number of initiatives set out there, all of which I think are worth exploring. My top preference would obviously be for Eurobonds, but obviously the Euro group per se is not, as we know from the recent discussions, particularly open to that, because certain countries feel it undermines the security of their economies. I think that's a conversation we have to continue to have, because without a doubt, it is the mechanism. If you look at how America responded to the last crisis by basically issuing American bonds, and in fact floated out of the crisis a lot more easily than the countries which were worst affected by it in Europe. The wealth tax, yes, I think that's something that should be looked at. I have an original background in taxation, and I would say the idea that the tax is kept low is actually a good one, because if you want to get a buy-in, if you make the tax very, very high, you're going to find that very wealthy people who are likely to pay this wealth tax, that they will go to the nearest accountant to find a mechanism to avoid it. And for instance, we have, and I mean, Ireland obviously has an issue here. We have a lot of companies in Ireland who can have working in Ireland and having a big presence in Ireland, who also on a worldwide basis don't pay a lot of tax. And as I say, I gave earlier the example of George Bezos having a 24 billion increase in his net wealth during this period of the crisis. Without a doubt, if we could find a way of enforcing that, and of all countries taking it up so that it became operational, yes, but if it's only partial, then the history of those taxes can be that essentially those individuals make other arrangements, and the individuals who might be subject to it. But I do think it's worth looking at. And I think the other options which were in the paper around monetizing and then cancelling the liabilities on maturity. I mean, again, I think it's possible for the European Central Bank to take actions like that. And again, perhaps technically, that might be some of the easier ones to do. In relation to the unemployment rates, I think the important thing is to look at what were the negatives that emerged in terms of democracy from the last crisis. And what emerged was huge amounts of unemployment in certain countries, unemployment particularly among the young. And then we also had a situation where a lot of people became permanently on welfare. Because to be honest, if you lose a job for a long period of time, all the evidence is, for instance, both your physical health and indeed your mental health may well suffer. So it takes a long time to reconnect to the labour market. So I think we have to look at this crisis and say, how will we ensure that we improve equality rather than hugely increase inequality? The role of the European Parliament, well, I think the European Parliament probably feels envious of the Eurogroup, because of course the Eurogroup had a very strong influence on the outcome in relation to SURE. But I do think the European Parliament, I suppose what they're doing at the moment, meeting in session and discussing the issues, I think that's what most parliaments are doing. The actors at the moment tend to be the government, the Commission, and in fact also the Eurogroup.
A half question was also sent to Teresa Kuhn, but I would like to extend this by a question from Rui, who is asking whether some kind of European solidarity convention could be established, and putting social justice more strongly into the foundations of the European integration. I think that's the essence of this question.
Yeah, thank you for this question. I think it's generally a very good idea and going in the right direction. There has been, of course, lots of efforts already to strengthen the social dimension of the European Union. And I think here the difficulty is that either such a convention would stay relatively symbolic, so just in a way, yeah, not much more than lip service. But then the question is also really, yeah, is this really useful? Because I think there is quite some symbolic rhetoric already going on that level. And if you try to actually make it more than symbolic and really link it to certain laws or to yeah, give it much more weight, then I think the difficulty is that we see similar cleavages emerging as we see currently in the debate about, for example, the Eurobonds. So there, I think an abstract commitment to solidarity is very difficult to get, because as this research showed that I presented here, but also other research, people are very sensitive to the circumstances in which you basically provide solidarity to other Europeans, and also who are the recipients. So I think there, whatever the agreement would be quite specific and quite narrow, some kind of common minimal agreement. I also think that here the difficulty would maybe again not be so much the public opinion, but also again member states, and not only because of this fear of other countries exploiting solidarity, but also because I think member states would like to keep questions of social policy and redistribution in their own hands, because it is a good instrument to actually raise some kind of loyalty of their citizens to this own nation. So I think member states are sometimes also afraid that if they give this power away to the European Union, they will have themselves more difficulties to actually find public support for their own government and legitimacy. That would be in a way my hesitations about it, but in general I think it's a good idea.
Thank you much. Frank van den Broeke is next.
Well, I'd like to follow up on this. So the question by Rui was, could we have a kind of a European convention? And then he referred to human rights, but more mandatory. I think there is a way to go, or there is a way to pursue, and it builds a little bit on what's been said by Teresa and by other people. If you take the problem of precarious workers who are not well or not covered by unemployment insurance, or if you take the problem of self-employed people or fake self-employed people who are not protected, there is a very clear principle on which European member states could, and I think should agree, that is, no one in Europe who is working in whatever kind of employment form, contract, activity, sector, should be without coverage by social security. That, I think, could be a basic element of such a convention. That is rather already more down to earth. It becomes practical. I think it would be crucial. And as a matter of fact, it's already launched by the European Commission as a principle in the so-called European Pillar of Social Rights. And the Commission also followed up by a Council recommendation, which is a soft instrument. It's a Council recommendation issued last year, saying all member states should see to it that all workers are covered by social security. And as Teresa says, this is sensitive. For instance, the Dutch government in the Council put a footnote saying, oh, delicate. We do have many self-employed. It's not so easy. Don't think it's so easy. So it's very sensitive and there is resistance. Yet I think it's the way to go. And so I believe that maybe also what we will see happen with precarious workers and self-employed who are not covered, young people who are not covered, I think we will see that this kind of principle that everybody should be covered by social security and some kind of unemployment compensation, this kind of principle indeed is key. And this is what I meant when I said earlier in the discussion, you'll need some kind of conditionality, but a positive conditionality. You should say to member states, look, we support you, but please get your act together and see to it that you have a well-functioning safety net that is well organized. And so that's, I think, the way to go. And that goes some way in the direction that Rui indicates. And it can be connected to the things we are discussing right now.
Thank you very much. Frank, why don't you also answer a question from Robin, who is asking about the impact of single market interdependence. In fact, Robin sent a long essay, but the essence of this essay is if and to the extent countries and nations recognize the interdependence which the single market creates, does it not make them more open or receptive towards the risk-sharing instruments and perhaps not even just on the basis of loans, but possibly, slowly opening up towards grants?
Yeah, again, a very good question or a very good remark. And to be very open in this debate, I'm pondering this issue. Let me explain. Over the last 5-6 years, this whole discussion on unemployment reinsurance or risk sharing, as Teresa put it, so risk sharing and solidarity in the domain of unemployment, the whole discussion was linked with Eurozone reform. So it was all about the monetary union, and it was about the fragility of the monetary union. And so measures as the kind of measure we are now discussing, it was seen as completing the monetary union. However, I now think that indeed, not just in the monetary union, but in the whole single market, we do have interdependencies that are such that when you're confronted with major disruption, you need collective action and thus solidarity in one way or other for the whole single market, not just for the monetary union. And that is, it's maybe we might have formulated that more explicitly in the Vox EU paper, which Laszlo and Teresa and Roel and I wrote. But if you read the paper, it's a bit implicit because basically we say, this is part of Eurozone reform, but we also say it holds for countries that are highly economically integrated. And so, yes, I think you're right. I think there is a reality of interdependence by value change. There is a reality of interdependence via demand effects that maybe forces upon us thinking more in terms of single market solidarity than just monetary union solidarity. And my mind is, I'm a little bit maybe shifting my perspective on this. It's a very good remark.
Yes, probably the starting point is that whenever we invent something where the rationale is created by the functioning or malfunctioning of the monetary union, it should be inclusive for everyone in the Eurozone, yes, but open to everyone who is not in the Eurozone. And I think unemployment insurance or reinsurance, whenever it comes, should be constructed this way. Yes, look, we have about 10 minutes left from the discussion. I wonder if the panelists would like to respond to any points that have been made or raised in the discussion already, or connect with any technical follow-up points that have been made by those who ask questions in writing. I think there is a great interest in whether the European Union would also, in this crisis, like in the previous one, make some steps towards more community instruments, but only in a way that is a very difficult burst, because every step is an intergovernmental step also towards the community instruments, and by definition very, very complex and complicated. Maybe it's the better expression. What do you think about this, or do you have any kind of final thoughts which you would like to share or respond to each other's points?
No, I maybe just one sentence. I think, Laszlo, the way you formulated it in your last few sentences, I do like that. So I think politically, indeed, because of the whole euro area crisis, we were very much focused on responding to that crisis. But now I think we see that solidarity is a broader issue, and the interdependencies are much broader than just the euro. And so thinking forward, I think we have to repair the monetary union. It needs to be completed, and for the monetary union, unemployment reinsured should be compulsory in a sense. But we should open it up to single market countries that are interested in joining for reasons of solidarity and interdependency. So I think that's, there is this kind of step-by-step progress that now should be made. So yeah, I like that conclusion. Yeah.
Teresa, would you like to add anything?
Yes.
Go ahead.
Yeah, I think as a conclusion, what I would like to say is that there seems to be some kind of concern from especially Northern European governments about public opinion, and that there could be some kind of public opinion backlash if they support solidarity across the European Union. And I think that possibility is there, but I think policymakers really have quite some room for maneuver to actually come up with a policy that receives majority support also from people who are more skeptical towards European integration. So I think it would be, I think especially policymakers who are, on the economic left, I think they should really try to focus on policies that are viable, but that are also supported by the public, and that is possible, and they should focus on that rather than trying to win votes from the extreme right or populist right, which I think some policymakers currently are trying to do. Thank you.
Thank you very much. And finally, John, what is your message to the progressive family, for progressive thinkers or analysts or policymakers?
Well, in terms of your market, single market integration and so on, I think in Ireland we're particularly conscious of the fact that our nearest neighbour, the United Kingdom, has chosen to actually leave the European Union. And of course, we know there's a swirl of populist movements and far-right movements in quite a number of countries now. I would say that in terms of the politics, as opposed to simply the economics, people on the left and social democrats, I think, need to show hope and give indications of things we can do to provide people both with employment. Employment is so important to people, whether it's self-employment or it's employment in a job. I think it would be very important as well that, unlike the last crisis, public services, areas like education, areas, particularly now like the health services, that we see those as really important collective services that allow the European Union to be, if you like, functioning and competitive globally at a very, very high level. And I think that, for instance, the show of solidarity with people working in the health services has been absolutely enormous in every country. On the other hand, when you think about it, a lot of people in the health services, particularly dealing with the care of very elderly people, they are migrants who have come into Europe from right around the globe, and certainly in Ireland, from particularly countries like the Philippines and different parts of India. And I do think another basic policy we should try to get an agreement and a convergence on is a minimum wage that becomes a living wage. And also because a lot of those workers now are doing vital jobs, but their employment really is not sufficient, certainly in our large cities and large towns. Very often it's not sufficient to pay for housing and to allow those people to have a family life. So there's a disjoint there in how people experience Europe, and yet at the same time those public services are so vital to every country. And as I say, in Ireland we have the unique situation now where we have the Northern Ireland, the 6 counties in the British jurisdiction, and they took a slightly different approach to dealing with the COVID to the Republic, which has been very strongly aligned with the policy of other European countries. So I must say, I'm really glad that the SURE initiative is there, but I do think it's a political imperative to try and build on it and develop it. But also, I think as well, yesterday, I thought the apology that Mrs. van der Leyen, that Ursula gave to Italy, I thought that was important and significant in terms of not presenting a Europe which at times from countries with difficulties can seem a bit over bureaucratic. Now, I know it's easy always for people in home countries to maybe blame Europe, but equally I think we need Europe, and if we can develop it properly, we can use this crisis to learn and to improve things.
Thank you very much. And since this brings us to the end of this discussion, this very first FEPS webinar today, I would like to thank everybody. First of all, the panelists for the fascinating presentations and your readiness to answer all different types of questions which came from the audience. I also thank the audience for the attention, and especially those who sent questions in writing or in live intervention. I also thank the FEPS team, which organized David, Elaine, and Elena. And let me just say finally that I'm glad John mentioned the apology of the Commission President. This is not very frequent that a leader of an institution expresses not only regret but apology. That was probably the right thing to say about Italy. But I think when it comes to the SURE instrument, then we see something the Commission President and the entire Commission and the Social Affairs Commissioner, Mr. Schmidt, can be really proud of. I think they should really take pride in this very quick initiative that they made. I think this discussion from an economic, from a financial, from a social policy and a political aspect highlighting what this instrument is about, what it can deliver. I think the merits and the capacity and the potential has been quite well explained, but it was also clarified that this instrument can also be a small component in a bigger picture of crisis response. And this first step has to be followed by many others, both in terms of economic crisis response and social policy development in the European Union. I thank you all for the attention and the participation, And please follow FEPS on various social media channels, including Twitter and Facebook, because there will be announcements of future webinars on similar COVID-related policy issues. Thank you very much.
Okay,
And
thank you.
you.
Goodbye. Thank you. Take care.
Thank you.
Bye-bye.
Bye.
Bye.
Thanks a lot.